Good morning, America. Thank you for watching Taxes Made Easy. A lot of information today, and we spent the last couple days going over Trump tax plans. We actually want to finish up on that last article I didn't get to finish up on today, um, but also want to dive into some really interesting articles that came out as to what happens if Kamala Harris wins, and what is the Biden plan? What kind of impact will that have? So we've got a lot of interesting news today, a lot to cover, and so we're going to kind of wrap up from yesterday what I kind of was running through at the end. But it's going to be an interesting show, and if you have any questions, you could always reach out to us through our website, guardiantaxlaw.com, or by calling us at 520-485-7371. Stay tuned, and we'll be right back after this break. Welcome back, everybody. And like I said, we've got a lot of information to cover, and we're just going to dive right into it. First of all, Hurricane Beryl hit Texas, and you have. I'm going to go ahead and share this screen with you so you can see what I'm talking about. This is straight from IRS.gov. Again, another disaster. I'm not going to read off the counties because in Texas, they love lots of counties. There's 67 counties affected in Texas by Hurricane Beryl. And so you have all these counties. If you don't know if you qualify, just go to the list and it just lists out all the counties. If you're in those counties, you get filing payment deadlines get extended. So and it just goes through the different deadlines for different quarterly payments. And you can get penalties and interest abated if you they will be abated as long as you make your payments timely by July 22nd, but this came out yesterday. Anyway, so if you have questions, go ahead and get this done. Again, this is something that the IRS does regularly when people are hit by disasters. So again, good news here for those that went through Hurricane Beryl. Another quick topic, and this is, I just spoke to someone yesterday, and they can't afford to get their tax returns done. There are plenty of free clinics. There are still plenty of free services that you can use. One of them is IRS e-file. So their free file service is still up through the October deadline. So get on there, see what's available, exploit this. If you just need to get your tax returns done, you can always go back and amend them when you have more money, but sometimes it's just very important to get tax returns done more than anything else. And so this can definitely help you to get those done. If you have questions or you need to find a free local tax clinic, you can Google it, or you can call us and we can help you find one as well. So moving on to what's going on in the economy, we talked a lot about how Bitcoin and different digital currencies are doing really well right now. They're exploding, and again, they're very speculative, so it goes up, it goes down, it goes up. Right now, a lot of this is due to ETFs, so they're another way to market Bitcoin and make it easier to trade. And you have different firms, BlackRock, Fidelity, Grayscale, launching these funds. So, and they're having huge successful debuts. So again, this is one of the reasons Bitcoin is really garnering a lot of interest and going up. So Ethereum is one form of it's like Bitcoin, just a competitor, and so they're going to be for Ether, the world's second largest trading cryptocurrency behind Bitcoin. So again, this is pretty big if you're into digital trading. just don't dive in though if you're not familiar with it. There's a lot of ways that people lose a lot of money trading in Bitcoin and Ether if you don't know. If you're not familiar with how to do this. So if you want to play around with it, put a little bit of money in there and just see what goes on, or talk to someone that is familiar with it. The problem is there's no underlying basis or justification for cryptocurrency. So it's it goes up fast, it goes down fast. So again, it's if you are older or if you want to make sure that you have conservative long-term growth, it's not an investment for you. But there are plenty of people that do make a lot of money off of it. Again, if you have questions, talk to an expert. Most financial advisors do not recommend these still, but some, like I said, some BlackRock, Fidelity, some are pushing this. Moving on, interesting topic here about China. And China's been in the news a lot, especially when it comes to taxes due to tariffs. Now, President Trump has come out and said that they're going to hit them with, 60% tariff, which is going to hurt, especially in the short term. Long term might not have as big of an effect. But President Biden came out and said he would do 80%, just top that number. On the whole, there's a lot of bipartisan agreement that China finally needs to be held accountable, that we need to hit them with tariffs. And that's great to hear that it's bipartisan, that finally people are going to hold China accountable. So this article focuses on the struggles of the Chinese government. So they're trying to rebalance, but the problem is that they're not letting the market do it. The Chinese Communist Party has their fingers all in the economy, which makes it hard to just let things happen. So right now, they're focused on export-driven industry, debt-fueled investments in real estate. So buying lots and lots of debt. The real estate market in China is really suffering. They put there was a boom and then a huge bust because guess what? Most people can't afford it still in China. Most people are still living in extreme poverty in China. So China wants their economy to boom and take off, but they still have the government controlling and dictating what's going to happen. And so one day they'll learn that communism doesn't work so well, especially when you have a command control. The government's still telling what's going to work. So China, the Communist Party, is doing some things right in that they're saving more than anything else. They own a lot of debt from the United States and other countries, and they have a lot of investments, but they can't just force their economy to improve. They have to encourage production. They have to encourage innovation, and they're notorious for violating personal rights and property rights. So, so they just had a huge meeting, and they're trying to prioritize economic growth in a different ways because they've kind of maxed out what they can do, and they've mainly with subsidies. They've subsidized, and they're not going to pull back on those subsidies, but they're pressuring and causing a lot of trouble throughout the world and domestic markets, not just in the United States, by flooding other countries with cheap goods. But they're trying to modernize the Chinese economy more than anything else. And so, again, China's trying to use a mix of planned and market-based policy changes. And they're getting mixed results as a result. So they want technological innovation. They want to see more science-driven achievements. They want to really see their they had a list. It's kind of escaping me right now, but they want to see innovation. They want to see technology. They want to see science really take over and help lead their economy. One of the worst parts about this is the Communist Party steals ideas like crazy. Why would someone put the effort into developing a new idea when their government is very likely to steal with it and run with it just like they do everybody else? And this article doesn't touch on that, but it's one of the glaring things. They want technology, they want innovation, but they always steal it. Or most of the time they steal it. So why would the Chinese, that's why there's a huge brain drain in China, is because people, why would you operate in China? People are just going to steal, the government's going to just steal your ideas. And they don't get that they're hurting themselves by being so unethical. So a big difference here is household consumption has not increased. So their per capita income is 5.4% increase. So the income's gone up, but their sales growth is only going up 3.7%. So people are buying a little bit more, but what's the difference there? People are saving, not spending. Why? They're saving because a lot of them are still living on the margins. Even the wealthy, they're not sure what's going on. The outlook for China's economy is very poor. People are very pessimistic about it, so people are saving money and holding on to it. We could learn from that. Our saving rates in the United States is very low. They're saying around developed economies, more developed economies, people spend about, or the spending, retail spending is about 50%, 50 to 54% of an economy. In China, it's only 39%. But there are advantages to savings. It's just not the immediate advantages that the Chinese government wants. So they want numbers. They always want to show, look how great we're doing, instead of stepping back, what's best for the economy, what's best for individuals. And again, because people are so poor, even though they're saving, they have low overall levels of savings. So they get a little extra money, and they're going to hold on to it because they're used to things being so tight, and their economy has been very stagnant. So again, this is, and then it gets into the tariffs and how that's going to impact China. And there's an estimate that the Chinese GDP will go down by 2 percentage points with a 60% tariff. Others are calculating 2.5% hit, or half their GDP growth. So they could really impact China. And I think it's about time. Personally, I think it's about time that someone took China on and was serious with them. So coming up on another break here, and I guess we can do this next article very quickly. The same tech outages that faced Delta and other major airlines are still creating huge issues throughout the economy. And who's getting hurt? Small businesses. So again, I'm going to introduce this article, but we're really going to have to talk about it when we come back. The main difference here is large businesses, they can hire IT guys, they can get them to jump on it and address it. What are small businesses to do, especially if they're heavily reliant on tech? So we'll be right back in a few minutes. Welcome back, everybody. Just continuing on with our last article, small businesses dealing with the global tech outages. I mean, it's a small issue here well, larger businesses are still struggling with this. Delta's still struggling with this. But for smaller companies, example, they've got a few people in New York, one in Maryland. They're relying on virtual assistants, therapists, not able to sign contracts because it's done online. So again, this is really comparing those that can get professionals in there to fix these issues quickly versus those that can't. Unable to pay payroll, do research projects. A lot of this is done online today. So this is why sometimes having older systems or having some kind of backup is very important. So, and so relying on third parties, especially tech, can really be damaging for smaller businesses. And again, when we have issues like this hurting smaller businesses, it is a big issue out there for our economy. So have a fallback in place, have alternatives to getting things done, because sometimes the internet just goes out. And again, just kind of highlights the concern that we talked about yesterday is when you have too much, a few companies running the internet or running the security, and when they have an issue, it can cause a lot of repercussions throughout the economy. Next article, Hunter Biden's going to trial. And again, just keep thinking, I've talked about this today. I'm not going to beat this ad nauseum, but people talk about, am I going to jail because I owe taxes? Am I going to jail because I owe $1.4 million in taxes? I have someone right now just got an installment agreement approved to pay off over $2 million in taxes. So why is my client not going to jail or not being prosecuted while Hunter Biden is? First of all, he lied. He filed false tax reports. He hid all of his income he was getting from Burisma and other questionable sources. And what do you do with those? Again, if someone has a lot of income and in my client's case, COVID happened. He was doing just fine, paying his taxes for years. COVID happened, the business crashed, and when his income went down, all of a sudden his poor financial planning was greatly exposed and he was hurt. Long term, he plans to pay his taxes. He's trying to pay them now, but he's never hid anything. He's never been dishonest with the government. And again, he didn't go on a spending spree. Hunter Biden famously went on massive spending sprees, millions of dollars on drugs, escorts, luxury cars, and other high-priced items. So instead of paying his taxes, he's not a very sympathetic character because he went and lived a life of luxury and excess rather than paying his taxes. So again, it's that IRS does not like that. So he has 3 felonies and 6 misdemeanors. Is this the biggest case in the world? No. It's in the news because of who Hunter Biden is. But I use this to highlight when someone is prosecuted and when someone isn't. And I've already mentioned before, the interesting part about this case, the tax debt has been paid off. It was paid off after the fact by someone, a political connection that he had, and they say, oh, you have this huge problem, we'll just pay it off. 9 times out of 10, that solves the problem. But the problem is he lied repeatedly on his tax returns, tried to get a sweetheart deal that most Americans would not get, and because he tried to play the game, and eventually became too big of a hot potato for him to be protected. And that's why, again, this statement from the prosecutors really does, this is what's driving this. No defendant would be afforded a continuance because he wrongly chose to lodge a jurisdictionless appeal. And this is the key part, and this defendant should be treated no differently, court documents state. So this is the prosecution, how they're treating Joe Biden or Hunter Biden. He shouldn't get favorable treatment. He has gotten favorable treatment in the past. It's like, that's done. He's not getting protected anymore. Let's treat him like any other citizen. And that's how the judge in this court in California is treating Hunter Biden. So, and then in June, he was convicted about lying about his illegal drug use to purchase a gun. Again, those rules are in place. If we don't enforce the gun laws consistently, it's going to be just hard to justify more gun laws if we don't follow the laws that we have. So jumping back to our article, and I kind of rushed through this, the end of show yesterday. So talking about inflation, Trump says he'll end the inflation nightmare. Economists say it could drive up prices. I think it's a mixed bag here. And I want to take more time to dive into it. So they're saying if you reduce and cut taxes, it could lead to more inflation. That is true, but what do corporations normally do when they have more money? If they think the economy is going to increase, they do two things. They give more money to their investors, to their the owners, or they reinvest it in the economy. So let's say the wealthiest collect more. What do with it? They don't just shove it in a bank. They reinvest it into the economy. So they don't hold on to it. So they might not reinvest it in that corporation, but they'll reinvest it elsewhere. Because the rich know that you lose money when you just stick your money in a bank account. Inflation eats it up, reduces its value every single year. And that's in most cases. Historically, banks did outperform inflation, but lately, really since we really kept interest rates low since George Bush, it hasn't been true, especially in the last few years. So we artificially kept interest rates low while real inflation was higher than that. So again, it became counterproductive to just put your money in a bank. So that money would get invested. As long as that money is being invested and more production, that's where GDP will grow, and you're growing the pie and creating more growth. And if you have more production, actual production, instead of just money flowing at people, the idea is to get the government out. And as long as you're growing the economy, that's a good thing. So again, if we had similar inflation as to what we have now and high growth, very few people would be complaining. Everybody's incomes would go up. And again, we would want to reduce what's happening with inflation now. But interesting thing is that another central plank, and they kind of focus on immigration, deporting immigrants, especially for those that should not be here, especially those that just walked across the border, the gotaways, the people that have broken our laws time and time again. I don't know why we're not deporting, especially those that have criminal records or belong to one of these gangs or cartels. We should be deporting them en masse. So, oh my goodness, that could force employers to pay higher wages. Like, that's a bad thing. We are jacking up minimum wages across the country. We are artificially, through the government, forcing minimum wages to go up. But rather than flooding the labor market with all kinds of illegal immigration, why not have those jobs and that money go to Americans that are here? And that would cause wages to go up naturally. Would not create the crazy distortions that we're having in our market now with inflation going through the roof. Interesting thing, just read an article, don't have it right now, about Disney. They're getting, their union is talking about doing a strike because they don't feel Disney is paying enough. One of the big reasons is there are people not making $20 an hour at Disney. And there are people that have been there for years making $24 and they think, I've been here 10 years, I should be making a lot more. Well, if you're still doing the same thing after 10 years, you're not going to make that much more. You have to increase your skills, move up into management, and progress in your career. Otherwise, if you're doing the same thing, you're not adding a whole lot more value. But again, this is one thing that drives me nuts is illegal immigration forces wages down. Whereas if we want real wage growth, flooding the labor market with cheap labor is not the way to do it. It's a way to undercut blue collar and lower income workers, and it actually hurts the poorest in the country. And they do much. They warn that inflation could be bad, but if the economy is growing, it's not going to be as bad. It's where you have the economy stagnating. The labor reports have been fair, if not to worse. Most of the growth has come from the healthcare sectors and government spending, not real economic growth, which is, that's the problem here. So tariffs absolutely can cause inflation. They probably will cause inflation. Will it put China on even ground with us? Very likely, yes. So we talked about tariffs yesterday. I don't want to focus too much on that. I want to kind of focus on immigration here, costs and benefits. Is it going to hurt to have a whole bunch of people go back to Mexico? Sure. There will be some dislocations. Public schools will lose a lot of students. But if they shouldn't be there anyway, you have a lot of local spending, state and local spending that goes to illegal immigrants. So if you deport millions of immigrants, it will disrupt the economy and the labor market. But basically, it will make it so people will have to pay a better wage, higher wage for a labor market. That's supposed to be a good thing. Working and spending money in the economy, they absolutely do work and spend money in the economy. The problem is they can't function very well when it really comes to it because they're here illegally. They don't have a valid social. They're not supposed to be working the money, so it really does create room for a lot of abuse. There's a lot of human rights violations that go with illegal immigration, from slave labor to people being used and abused, beaten, raped across the border, and on the way to the border. I read something where the average woman traveling to the border is raped about 3 times on the way to the border. And almost nobody talks about the human cost of having an open border. It is insane. Immigrants also drive up costs for both the federal government and local levels. And the cost would be eliminated. One thing that would drive demand for housing down is if you stop illegal immigration or curb it, and you technically don't have to deport people, a lot of them self-deport, which happened the last time President Trump was elected, it would lower demand for housing. It would allow working people that end up homeless, the opportunity to afford rental apartments again. You want the housing, you want to address the homeless problem? Stop driving up the cost of housing. That's going to make a huge difference, a much more immediate impact than anything else they're suggesting. They want to build 2 million homes. Yes, we do need to build homes. But by taxing people and doing rent control to help, it's exactly the opposite of where we should be going. So the next article, really, and I'm going to introduce this just before we hit our break. This is from USA Today. So interesting take here. Talks about the changes if President Trump isn't elected, if Harris or another Democrat is elected, they will most certainly allow the TCJA to expire. And again, I don't hesitate to put half the blame on the Republicans for not making these permanent in the first place. Why would they set this up? They think it's gonna, help them in the future. Oh look, this guy's falling taxes are going to be up. It's like, yeah, because you didn't have the political will to actually do it right the first time. And both sides do this. It's part of the games they play. So if the TCJA sunset, how will it affect people? There's pros and cons here. But it's going to be, they call it the Super Bowl. Tax law changes in less than 18 months if nothing happens. What go higher? Tax rates will definitely be higher. And again, the tax brackets and tax rates were lowered across the board. And again, shifted the threshold. So people will pay more across the board if these expire. The Biden administration claimed that they weren't going. They went back and forth. One, they're going to get rid of all of them, or two, they weren't going to increase taxes on anybody making $400,000. They don't have to do anything. They just have to let this expire to have that happen. So it's going to be really interesting to tell. And unfortunately, we have few specifics because our media plays a personality contest rather than focusing on real issues. What are we going to do? How is this actually going to impact people? We're coming up on another break and just about 30 seconds. A lot of people are talking about accelerating income into 24, 25 if you have Roth IRAs. We've talked about this before. Or if you have a normal 401k or IRA, you can convert that to a Roth, pay the taxes now, and avoid the higher taxes coming up. So a lot of people are planning on doing that, doing a Roth conversion to save money. And you can look at the timing of deductions to also save money if tax rates are going up. Itemizing is going to be a huge thing again, but we're going to talk about that after this next break. Welcome back, everybody. And just continuing on with the conversation we were having, um, how will your taxes change? Let me go ahead and share that screen. And the big thing is across the board, if they just get rid of the um, TCJA or Trump tax cuts, overall income rates will go, well, tax rates will go up. And when you will hit different tax rates will go up as well. So it's going to be a little more complicated. Um, Now, who knows what's going to happen with the pledge of 400,000, not taxing anybody 400,000 or more. Inflation is a huge tax as well. So government spending, the more government overspends, it really is a hidden tax. Government's getting money that's it's getting cheaper to pay down their bills the more everything inflates. But as interest rates go up, it's going to hurt the government more in the long term. So really is save a penny now, spend more money for an immediate effect to mortgage our future. Um, Itemizing. So with the Trump tax cuts, a lot more people did. The standard deduction went up so high. And so that with the standard deduction so high, people were just using that instead of itemizing. In 2020, about 90% of tax filers claimed the standard deduction. That was up 70% from 2017. They got rid of the personal exemption of $4,050 per person. So this actually hurt families with a lot of children. But again, the thresholds for taxation actually went up for most people, which helped people. So if you had a lot of children, it hurt you to get rid of that personal exemption. But again, the standard deduction doubling for individual, for a husband and wife, made a huge difference for most people, offset that. So again, with the lower standard deduction, more of your income would be taxable. You would have higher tax rates, and again, your withholdings would have to change very quickly. So the child tax credit was double the $2,000 per person, with $1,700 being refundable, which means even if you owe taxes or whatever, it would still go to your pocket. And then it's supposed to go to $2,500 starting in 2024. If they don't do anything, it's going to jump back to $1,000 per child, and it would be refundable. And so again, it would cut that in half. So again, the House passed a bill that would expand the child tax credit starting in 2024 and expand it to 2025. But again, it would, again, there's a lot of little changes in here. Work requirements would remain, but low-income families would get $1,800 refunded of the $2,000 per child tax credit. Because if you don't have enough income to be taxed, you can't get a credit. So again, they would get a chunk of that, but not everything. One thing that the TCJA had hurt was got rid of a lot of deductions, and there was a lot of abuse. But again, a lot more people are working from home, so there's a lot of people that can't deduct a lot of things. So mileage, home office supplies, union dues, uniforms, internet, telephone, magazine subscriptions, and meals when you're working from home. So if you're W-2, the TCJA got rid of all those deductions. And then the deduction on home mortgage interest is only the first $750,000 currently. That would increase it to $1 million. And with the huge inflation in homes, there are some homes in the Bay Area, New York, LA area that an average home might be around $1 million today. Moving expenses deductions, but the alternative minimum tax could ensnare, what would probably ensnare a lot more people. So again, that affects high-income Americans and pretty much force them to pay a lot more in taxes. Um, State and local tax deductions gets uncapped. So right now there's a limit up to $10,000 of how much people pay or get credit. So if you live in a high tax state, you can only claim the first 10,000 of state and local taxes. So for most the average person, they're not paying 10,000 in state and local taxes. But for high earners, this is a very real thing because the state taxes are so high. But when you give them credit for that, you're essentially forcing low tax or no tax states to subsidize the taxes in high tax states, which are mainly California, New York, and other, New Jersey, Illinois. Texas, which is interesting, must be property taxes. Pennsylvania. But again, those that have less money are subsidizing the bigger states that are charging more in taxes, property taxes, etc. So that would cost $197 billion to get rid of that cap. So it really is kind of a mixed bag, but overall, personal deductions would be cut in half. Child tax credit would be cut in half, and most people would pay more money. So again, going to this last article, and I think this is an interesting article. Who's actually paying these taxes? And the way they look at it, they have some good articles here, but they don't look at everything, and they're just looking at income taxes. The infamous line from Benjamin Franklin: "In this world, nothing is certain except for death and taxes." But again, all of us will die. Not everybody's paying federal taxes. Their taxes are being paid in other ways. But about 2.33 trillion in individual income taxes were collected this year, which is 48.5% of total receipts, almost half. So again, just want to look at the numbers here. Who's actually paying taxes? So the lowest brackets, people making up to $15,000 are paying the least amount. They should pay the least amount. I mean, if you're making less than $15,000, either you're a student or you don't have hardly any income at all. 15 to 30%, 30,000, they're paying just around 2% of their income in taxes, federal income tax. And then it goes up from there, 4.9. If you go 50 to 100, then it's 7 on average. Then when you go above 7%, and this is as of 2020, 100,000 to 200,000, roughly 11%, and then it jumps from 200 and 500. And then when you go over 500, that's when you're paying a quarter or more just in federal taxes. Now, this does not include state taxes. This does not include Social Security, which they actually talk about later on. Social Security adds 14.9% to this. So if you're, which is very disingenuous, Medicare, Social Security, and we're going to touch on this later, really does bump this up from 0.21% to 15%. So here you're looking at 17%. And then you're looking about 19% and going from there. So again, the total hit, Social Security being so regressive that when you go over a certain amount, I think it's 160,000 now, you stop paying. You pay on the first 160,000, but after that it caps out because that's the maximum benefit you can get, and it doesn't make to pay more and more into a system where you're not going to get any benefit from it. So they do have those taxes cut or capped at 160,000. So people up here, they're not paying percentage-wise up as much as down here. So Social Security, Medicare is very regressive, and it hits the poorest the hardest. And that's where a huge portion of our budget is exploding, and we're not controlling that. So again, when we talk about spending and entitlements, people hate when you call it entitlements. That's just a label, because it's something that we supposedly paid for, but the government has overspent so much, it's insane. So, and you can tell from over time. So 2000, it's really as the Bush tax cuts, things dropped down, everybody's tax rates dropped down, things leveled off, and actually went up a little bit during the Obama years. And then with Trump, his first election, they went down quite a bit. And at 2020, we're either leveling off or going up a little bit for the richest, giving an idea of where those numbers are. And this is just based on ordinary income. You also have plenty of income that's paid through other taxes, capital gains, etc. So refundable tax credits really benefit the poorest the most. So with people making $1,000 to $5,000, they're actually getting 31% back after credits. 10,000, 15, 20. So the refundable tax credits really help people up until they help across the board, but they help the most at the lowest brackets. They really don't affect anybody making 200,000 or more. Have the small, so before credit, after credit. So before credit, they were paying 0.13%, after the credit, 31%. So they really are designed to help the poorest, and they're doing their job. That's what it's supposed to be doing. And it kind of breaks it down. Interesting chart here on total government revenues. 48.5% individual income tax. And this is as of this last year, 24. 11.4% corporate income tax. But a quarter, 24.9, so almost 25% is Social Security tax. When you add in Medicare, that's over 33% of total taxes from Social Security and Medicare. So 8.5 plus 24, so that's 33.4%. This number is not included here. And it caps out with this group. So on the 100,000, 200,000. So all these groups here, in this whole area, are paying the Social Security Medicare taxes. That's a quarter. Well, I mean, they're paying, to be fair, they're paying up to 160,000 in, and after that, they're not paying more on it. So they pay somewhat into it. But really, this is a quarter of our spending, no, 34% of our spending. A third of government spending goes to Medicare, Social Security. And when people talk about taxes, they skip over this. They don't pay attention to this because nobody wants to touch Social Security and Medicare. But it is a very abused system. It's rife with fraud and abuse instead of actually really getting in there and seeing what's going on. It's a sacred cow that nobody wants to touch. So when you talk about other taxes, they're very minor: excise or sales taxes, estate and gifts, custom and duties, and then other sources, 2%. The vast majority individual and Social Security Medicare. So that together counts for well over 80% of our total tax base. And this kind of shows where, in a different form, where are we getting their taxes from? Social Security, Medicare, second only to individual taxes. So then you have corporate taxes, and again, talks about one of the big frustrations are how complicated tax returns are getting. The tax code, it just goes up and up. But I think the main takeaway here, and this is really what I want to focus on, get your questions answered. I'm not even sure it was sharing that. I thought it was sharing that last article. Should have been. So just so if you haven't seen, these are some of the articles we're looking at. All of this will be posted and linked to our website. Be aware of how different taxes, here are the refundable credits, helping the poorest the most, doing very little for those in higher income tax brackets as designed. But again, here you have the individual income tax rates added in with Social Security and Medicare. That's over 80% of total taxes. And again, it's 34% Social Security, Medicare. So pay attention to what kind of taxes are coming up, how they're going to impact you, because they will have a huge impact moving forward. Coming 2026, if we don't make any changes, your deductions will go up drastically. It will be more difficult to pay your taxes. And again, I would watch very closely what kind of concrete proposals come out. And I would be demanding concrete proposals from both campaigns, from the Trump and the Harris campaign if she gets the nomination. So let's be fully informed. Call us again if you have questions. How do I address this? How do I stay on top of my taxes? And we'll be back tomorrow with Taxes Made Easy. Have a great day.